Let's go ahead and talk about, is miner concentration once again jeopardizing Bitcoin? This is coming from CoinDesk. It will be an opinion piece, I believe, but the high percentage of hash rate now located in North America may look like China 2.0, but the reality is more complicated. One of the main pillars of Bitcoin's value proposition is decentralization. Why then does the computer processing power behind the largest cryptocurrency seem to be concentrating again in one place, this time North America? The answer is multifaceted, but some of the main reasons come down to where it's the safest in this geopolitical environment and most profitable for the miners to operate. Following China's sweeping crackdown on the country's crypto industry last year, miners packed up their businesses and fled to other parts of the world where the geopolitical situation is more stable and cheap power is plentiful. They moved largely to North America, particularly to the US. According to a report released by Cambridge Center for Alternative Finance, in October, the US accounted for 35.4% of Bitcoin's global computing power or hash rate. At the end of August, more than doubling the 16.8% share at the end of April. Kazakhstan and Russia followed the US with hash rate shares of 18.1% and 11%, respectively, at the time. Meanwhile, mining operations in mainland China had effectively dropped down to zero, down from a high of 75% in September of 2019. Most recently, the digital asset investment firm CoinShares said in a research report that the largest global mining country is the US, with an estimated 49% of total global hash rate located in the region as of December 31st, 2021. This concentration counters Bitcoin's promise of a decentralized network, where in an ideal world, hash rate would be evenly distributed globally. But the reality is far from ideal, and given geopolitical instability in some key regions, the trend of miners moving to the US is likely to continue. Quote, ideally, miners would distribute Bitcoin's hash rate across the globe in multiple jurisdictions, but they will migrate to the most favorable business, energy, and political climates they can find. That's why they are coming to the United States, end quote, said Colin Harper, head of content and research at the crypto software and services company Luxor Technology. It's not hard to see why a miner would rather be in North America than anywhere else, as lawmakers worldwide are starting to clamp down on crypto miners. Kazakhstan, which was a popular destination for miners leaving China, called for higher taxes, cut off power, and crack down on illegal mining operations. In February, Hong Kong-based cryptocurrency miner BitMining halted its near $10 million mining data center construction project in Kazakhstan, citing unstable local power supply. Furthermore, recently a proof-of-work ban narrowly failed to pass in a European Union Parliament committee vote. Russia has its own geopolitical problems at the moment. Having assurance that a whole industry will not be just uprooted or disrupted overnight by the government is one of the main considerations for anyone planning to start a business, particularly in such a young sector as crypto mining. This arguably makes the US, with its constitutional protections and federal system, the safest place for miners to set up. Quote, the United States is one of the better countries to experience hash rate concentration because the United States federal structure ensures strong rule of law and robust states' rights, end quote, Luxor's Harper said. This is also why I think you can see concentrations in places like Texas and not in places like California or New York, right? The basically states' rights in the US is what is driving a lot of this. And Texas, who is adopting cryptocurrency and helping with the power infrastructure to expand support for Bitcoin mining, is very attractive. And because of the rights of the states, we don't have to worry as much about federal government interference, at least right now. Make sure that you're going ahead and voting properly so that we can maintain this, right? And this is why we talk about it. Particularly after miners got burned by China's ban, a repeat of such total disruption to business would be costly, especially given the sector has become brutally competitive while margins sunk from their peak of 90% to between 60 and 70%. Quote, if it had been that a single country hosts a large percentage of the network hash rate, then I am glad that this is in the United States, given its federated system in which individual states have large autonomy over lawmaking within their borders, end quote, said Jurica Bolovic, head of mining at Foundry, a subsidiary of Digital Currency Group, which also owns CoinDesk. Quote, that diminishes the risk of abrupt countrywide ban on Bitcoin mining like we have seen in China, end quote. Or as Brian Bullitt, CEO of mining from Bit Digital, put in October, quote, nobody wants to operate in a region where they face existential risks, end quote. Dave Perel, CEO of data centers operator Compute North, said that the U.S. also has better access to infrastructure and a lower cost of power. We already discussed this. However, such a large concentration of miners relocating in the U.S. has started to draw ire of lawmakers and regulators alike, given these firms' massive demand for energy. In March, the Environmental Conservation Committee of the New York State Assembly voted to move along with a proposed law that would ban proof-of-work cryptocurrency mining for 2 years. Meanwhile, some federal lawmakers, led by Senator Elizabeth Warren, of course, have scrutinized crypto mining companies on the climate impact. Most recently, the U.S. Securities and Exchange Commission, SEC, proposed a new regulation that would require publicly traded companies to report information on greenhouse gas emissions and risks related to climate change, which would affect miners due to their energy consumption. However, the mining community, for the most part, welcomed this proposed rule. However, it's doubtful that Washington will try to ban digital asset mining altogether, as many states have already embraced the industry. Quote, it's unlikely that the federal government would move to ban or disrupt mining, and if they did, the decision would have to go through federal courts, not to mention the fact that states would fight tooth and nail against proof-of-work prohibition, Harper said. Especially Texas, because you have to realize that, like, one of the great things about Texas in general, just for this entire ecosystem, is going to be its influence from the total GDP. And it is one of the highest for states, and it's one of the only ones that is really, like, if we're being honest, is very bullish on Bitcoin mining. That's just a fact at this point. To complicate matters for policymakers, the mining industry has already turned into a multi-billion-dollar industry. In February 28th, research note Wall Street Bank B. Riley's analyst Lucas Pipes wrote that the industry has already grown to almost 100 billion US dollars in gross value of Bitcoin being mined. Most simply, to derive total industry value, we multiply coins to be mined times current Bitcoin prices plus transaction fees. Today, this value is approximately 92 billion US dollars, he said. Using a Bitcoin price of $38,000, which has now gone up about 9 grand already, if we look up here at 47, pretty much almost 10 grand at 47,739. Such a large industry will likely be hard to strike down completely in a short period of time. Another threat to Bitcoin's decentralization is a handful of mining pools controlling too much hash rate. That's true. Quote, mining pools are by definition a centralizing force in the Bitcoin mining ecosystem, end quote. We've talked about this, and there used to be PETA pools, which was going to solve this. Now, I think it's Braid or something along those lines is now being developed on GitHub. I'm following it closely, but it's really, you only got like on GitHub the information about what they want to do. That does need to get solved, especially for Bitcoin. In my humble opinion, you need to have, you know, if you're a large Bitcoin miner, I think you need to have some sort of internal node, and then that needs to go out, and maybe that can be fixed. That was kind of fixed by PETA pool for a while, and then it kind of just dropped off because the profitability wasn't quite there as much as it was in large mining pools, right? So that should get solved, I think, eventually. I know people are working on it. They provide a service of aggregating hash rate from individual miners in order to minimize the inherent revenue volatility and provide stable payouts. Foundry US is the largest Bitcoin pool in the world with almost 20% of the total network's hash rate, according to BTC.com data as of March 25th. The concentration may seem like another threat to decentralization thesis. However, mining pools don't control the network and don't have a lot of clout because any miner can quickly change pools if there is any hint of foul play, such as censoring Bitcoin transactions, Bolovic said. Quote, furthermore, there are developments such as Stratum v2 that would, among other things, empower individual miners to construct block templates, taking that power away from the mining pools, end quote, he added. Stratum v2 is a new Bitcoin mining protocol that is being developed, improving on many aspects of the previous version Stratum v1, which miners use to communicate with mining pools. The improvements include more efficient data transfer and protections against network centralization. Quote, the full feature set of Stratum v2 offers the miner the choice to select their own transaction set and construct their own block templates, allowing miners to easily revolt against pools that misbehave on censorship to the detriment of the broader Bitcoin network, end quote, according to a recent research report by Rachel Rabarzovic, something like that, Rabarzik, a vice president at Galaxy Digital Mining. Quote, even if miners don't utilize this power, the mere threat that they could will deter pools from misbehaving, end quote. The numbers showing regional concentration and the mining pools outsize the market share of the total hash rate look like a threat to decentralization. However, as long as their motivation is profit, it would be counterproductive for the miners to attack the network by banding together. Quote, to hit on the point about the threat to decentralization, miners ultimately act in their own interests, end quote, Harper said, noting that they compete against each other and wouldn't stand to benefit by cooperating to attack the network that generates their income. And a purely malicious actor with no profit motive, says a hostile state, would find an attack difficult and expensive to carry out given the heft of the competition to mine blocks. However, such concentration does increase regulatory scrutiny for the miners from the country they are setting up in their business in, Harper said. Luckily, I think the United States federal structure provides unique insulation against a state-sponsored attack against miners, he said. So essentially, what we're seeing is a concentration from China over to the United States. It is definitely more decentralized as far as like geographically. You also have to take into account the fact that you can have external investors into basically U.S. mining operations. So international investors can invest in that a little bit more freely than they could in other regions just due to the structure of the United States. So there is potentially there, while the hash rate is technically in the US, it doesn't have the same government control that, say, the hash rate in China would have. So it's kind of interesting. And that is even proven even further by the ability of China to just shut off all the miners. Luckily, this was a threat that was always worried about, I think, previously, and that if China shut it all down, the network would basically be more or less secure. And it was spun up so quickly in other regions that this really ended up not ever being a problem. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.